Checking in now with Brian Hoops, Midwest Market Solutions. And Brian, looking at these markets, grains again, kind of sluggish here today.
Yeah, the fund selling isn't as heavy or isn't as prevalent as what it has been over the last couple of days, but it's still out there. The overnight markets in soybeans were just a few ticks higher, and we could not break above those highs or even the opening range, and the fund selling started in once again. Now, the bad news is the funds are still holding some pretty sizable net longs in both corn and soybeans. So if they decide they're going to liquidate all those, we may have some significant downside pressure here yet, even though we're at contract lows in corn. With July corn trading at 418, you have real good support at the 420 level. I don't think we've been below the $4 area since 2020, and certainly hope we don't go back and test that. But December corn is getting close to some weekly support between 441 and 445, and hopefully with the hotter temperatures coming in next week, that technical support, the hot temperatures are enough to kind of curb some of this intense selling pressure that we've seen. But a lot of the story here is just long liquidation by the funds in corn, soybeans, and wheat. And when the technical trend changes and they want to get out of big long positions, it doesn't really make a difference what the fundamental story is. They're going to just see the exit door and hit that sell button and put some pressure against the markets.
It's been kind of remarkable what we've seen here in the cattle. I don't think a lot of people saw this coming, was when we finally did see screwworm in the United States, that the market would jump up higher like it has. But cattle have jumped up yesterday, and they've stayed in positive territory so far today.
Yeah, I wasn't totally surprised to see the cattle market recover yesterday. I thought we'd open lower because we have that headline risk with the algo type trade. But the good news is, we've been talking about this and happening for quite some time, and it looked like it was just inevitable that was going to happen. In fact, the Secretary Ag Commissioner had said, it's a matter of time when we have it here in the United States, and there's nothing we can slow it down, really can't prevent it. And now that we've had it here in the U.S., we don't have that headline risk or that headline worry that what happens to the U.S., when will it happen? It's happened. It's here. And it's kind of like ripping the Band-Aid off and just getting it over with. Now the market can go back to trading more, doesn't have that headline risk to worry about. It can go back to trade more of the normal fundamentals. And the fact is, if we have this screwworm in a cattle feedlot, for example, they have to quarantine, that actually it already constrains the supply even further, and that supply is already very tight now. It could even tighten that supply further. And I think we put in our summer highs and probably the annual highs back in April and May, but we also may have put in our summer lows here yesterday, and we should look at retracing some of the losses that we've seen over the last several months with a rally in the cattle market. In fact, August cattle have hit 62% of that already just today, and feeder cattle are back to 50% of their losses. So there may be some more gains to come in here. Not that we're going to make new highs, but the cattle and feed report this month looks to be friendly. I think you'll see some strength in this market.